Hi guys, my name is Ramona Chapman. I have here Justin Rocheleau, and today we're going to discuss more commercial loans. This is episode 6, so stay tuned. We are going to dive deeper into what a commercial loan is, where you can get this financing, what type of deals that you need to look for, but we are super excited to get started. So lead it off, Justin. What would you classify as a commercial loan? A lot of people probably want to know the difference between a residential versus a commercial. What takes you over that threshold?
So a commercial loan is a loan that you get to fund, those things that you have in between your TV show for like Glade or Spangles.
You mean a commercial?
You get a loan for that. Totally kidding. All right. No, commercial loans are they're a very large blanket term. A commercial loan. It can be collateralized by property, assets. And when we say collateralized, we mean secured, right? So you're saying, hey, I have this building that's worth $1 million. I want to get a $2 million loan. Can we make that happen, right? We're collateralizing that building. We're securing that loan with that building. And so loans can be collateralized by assets. It can be collateralized by properties. It can be collateralized by equipment. It can be collateralized by a ton of different things. The borrower's, the business owner's income itself, or anything else that they may have. They have personal assets. It can be collateralized by a bunch of different things, right? So depending upon what the goal of the client is and what we're trying to do, we can kind of steer them in the right direction. Maybe they are, they're a business that has very variable operating costs. Maybe it would be wise for them to have a line of credit, like a giant credit card essentially, to utilize whenever maybe their income is down a little bit lower. Let's say, for example, a landscaping company, right? They're going to have a ton of work between, if you're in Kansas, between like
March?
Well, January, right? Maybe between January and May, right, is when that starts, all the way to like October, sometimes even December, right? There's going to be a ton of work, though in all actuality, right? Probably between March and between October, right? Those are the prime times for them. But for those remaining months, right, they may not have as much revenue. It can be a little bit leaner, a little bit trimmer, right? They still have expenses to pay, right? They're not going to have as many workers, out there, making your front deck look fantastic. They still need to pay the bills. So maybe at that time they utilize their line of credit. Maybe they have a $30,000, $40,000, $50,000 line of credit that they can tap into. Hey, revenue's a little bit low. Let's pull a little bit out of this. We can finance it, for a low interest rate. Let's pull that money, use it now, and then when revenue gets jacked up in the spring, we can go ahead and pay it back. All right. So
you'll just keep doing this over and over again, right? You'll just rack it up, pay it back down, rack it up, pay it back down.
Yep, and as your business scales or shrinks, we can scale or shrink that line of credit. You say, hey, Justin, I've outgrown this $40,000 line of credit. We need to jack it up to at least $100,000. My monthly revenue is closer to $100,000 a month now. I need at least 1 month's worth available in that line of credit. So we can scale up or down depending upon what it is that you actually need.
Okay. What if you have a client that is like, hey, Justin, I live in Dallas and I own a few commercial properties, but I really just found a great deal. There was a medical office park and they have like 5 or 6 buildings. It's selling for $5.6 million. How can I buy it? What does that process look like for me, and what's that timetable?
Depends on the situation, right? Is that person going to occupy the property, right? That makes a difference. If they're just buying it as an investment property, then we follow different parameters. We can get a little bit more creative on financing. If it's owner occupied, it's pretty straightforward, right? You put whatever's down required for your particular scenario, as low as 5%, we've seen as high as 30%. Depends on the particular situations, of course. If you're buying as an owner occupied property, they typically want somewhere between 25 and 30%.
What I would say though, guys, owner occupied, he's saying that if your business is going to occupy it,
exactly.
I would specify that. Okay.
Yep, exactly. Yep. So your business is going to be functioning inside of that office park. Okay. If you're just buying it as an investor because you're like, hey, there's 6 podiatrists right in this little strip here. All right, they're paying me a good amount in rent. I'm just going to use it as a rental income machine. Mm-hmm. Then we would call that an investor or non-owner occupied commercial investment property. So we'd structure that, right? And those take, assuming that everybody's got their stuff together, they got documentation online, everybody's cooperating, right? We can close anywhere from 30 to 60 days. It just depends on how everything shakes out. Of course, every deal's a little bit different, and there's different things that may come up that may slow the process down or speed the process up.
What would you say it is, Justin? Wouldn't you say it is every situation, which makes it...
She's new.
All right, guys. So, leading from that, Justin, I got a weird question. I got a client who called me up and said, Ramona, I want to buy a boat. Is that something we can do?
What type of boat?
They want to buy a super yacht.
A super yacht, potentially. Not certain on boats, but I know that we can finance airplanes. I know that for certain. Okay. And this goes for most business assets, most business equipment. So, for example... that we're working on right now. He owns a Beechcraft jet.
Okay.
It's worth about $500,000. He put a little work into it. He's like, hey, I touched it up with some paint. I put probably $35,000, $40,000 into it. Spruced it up, put some new carpet down. I want to recoup my investment. Can I take a loan out against that plane to recoup my investment and maybe pull some extra cash out for some other purposes for the business? And we said, sure. Yeah, we have an outlet for that, right? We could put that on a 20-year term. We could put it at a decent interest rate. They tend to be under 6 or 7%. Pretty good terms. So yeah, we can finance a plane, right? Finance other business equipment. Maybe you need a boat for work, right? We have commercial lending is going to be able to cover that sphere, right, of business assets, business equipment, anything that helps you generate more revenue.
What about a development? What about oil?
Sure.
What about tractors?
Sure.
Okay.
Sure. Those all fall under commercial lending. If it's something that generates revenue, there's a loan that can be had for it. Hey, I need to build a refinery. Great. We have options for you. Hey, we want to build the biggest farm in South Texas. Great. Let's finance some tractors for you. Let's finance this.
What about a business? I don't want to build it. I just want to swoop in and buy a whole business.
We can do loans to acquire businesses. We can do loans to help franchisees purchase into a franchise. There's all sorts of different. It's very hard for us to say no because there's always somebody in that particular niche that's going to want to lend those funds. And luckily, since we're brokers, right? Our job is to go find those people for you. We have connections in a lot of these different areas. And if we don't know somebody that finances 4-foot little dinghies, then it's a small boat.
Oh, okay.
A 4-foot dinghy.
Guys, I thought we were going to have to bleep him out right there.
D-I-N-G-H-Y, dinghy. If we don't have somebody offhand that finances 4-foot dinghies, then, right, I know somebody that will know somebody that can do it. Right, so
Those
we can get connected to them. Yeah, I don't know. $10 to $15, a couple extra zeros. Who knows? But yeah. So as you can tell, right, by the feel of this episode, if you can dream it, if it has a backing to it, if it's got something that can generate revenue, there's a loan to be had for it. So commercial loans don't just stop at, I want to purchase a supermarket and acquire the building and this, that, and the other thing. Right? We can do it for so much more than that. So thank you for watching. We appreciate it. Have a good morning, afternoon, evening. Can't wait to see you next time. Episode 7 coming up next. We're just going to recap the prior episodes. It'll be the final episode of the non-QM series / commercial series. We're going to dive through it. But as always, thank you for commenting, and subscribing. And we can't wait to
see you next time. Thanks, guys.